Hey, it's Mack with PriceActionTradingSystem.com. And it's Friday. It's January 30th. This will be our chart lesson for today. And it's about 6 o'clock on Friday evening before I'm getting a chance to do this. So I'm going to probably work through this pretty quickly. Quite a few trades today. In the end, it looks like a big trading range, really. That's what I'd almost characterize it as. But there was a two-tiered channel that was valid. We got a break here and a move to a new low. So this ended up playing out. But in the end, it looks more like a trading range day than anything um, to me. So um, you can see the most of your highs were right across this level, and that acted as resistance, and then later on it acted as support, and most of your lows were right across this level right here. Um, you might even call it right there. But generally your overnight lows are going to be real important, and you can see that right there. That was real important across there. We bounced later. It held, even though we moved through, it still held right in there, and then it acted as resistance a little bit there again before prices pushed on lower into the close. So um, last trade I marked was about 120. But I'm going to back out where we can see it just a little better, talk about the trades, probably move through them a little quickly since it's Friday, late on Friday, and I'm ready to call it a week. And we'll be back and do it again next week. But the first trade I saw was just after 7 o'clock hour. Prices were chopping around. We'd had a nice channel down. We got a little break here. Moved down. There's a failed second entry long there with a big bearish bar. Just go short there. You can't hardly ignore that one. It's a breakout pullback short as well. There's some obvious support across there. You can see that. You might have even thought about going short below that doji, but I think I would have waited on this one and taken that nice trade. And then there's another pullback, move down, a pullback. It never broke higher. But you do have some matching lows, and it broke below them there. So you might have thought about entering that on a limit order. It's a little bit aggressive because we did have a break outside our close outside our upper trend line here, and a couple of legs down. But a move that strong, a lot of times you'll retest it again. So if you get a good setup, but that's just it's real close to. Like I said, if it would have broke higher and then went down, I would have probably liked it better, but it didn't. So I think it's a little aggressive. And then notice that new low, and you get that test of it. You could turn higher, and it ticks lower, and then turns and goes out the upper side. There's a nice trap right there. Um, it's a little bit aggressive again, but it's it fits the rules. It's like the double test rule of this low. And notice how each little push down is a little bit higher, but that trap right there, it's a failed second entry short, really on a period. It's a failed second entry short. The thing is, you can't be going short right there into those lows below a doji right there. So by sitting tight and being patient, you could have got a nice long, and then it pushes back and pushes down again, and gives you another chance to go long. You might have waited. If you didn't go long on this bar here when it broke higher using a limit order, definitely when you got this big bullish bar, I'd have gone long right there. And you're looking for prices. If it's a range, we're going back up, maybe all the way to here, but definitely somewhere into here. First, we're probably going to test this, and then you'll look for this area and so forth on the way up. But notice how it shot through the EMA, pulled back, and you got this trend line working up. We've got a close outside of it, so we're probably going to make a new high here, and you're probably going to test this midline at least, very least, but it just shoots on through there, and then you get a pullback, first entry, pullback, and notice how that trend line's holding, and so now you think we're probably going even higher. You're probably going up to test this high if you're looking at the range. You may not have had these highs and lows. You could draw this. You could see this right here, and sometimes I'll find it through the midline, but that's not so clear. But when you draw that and you've got these two equal distance moves from this high to this high using the closes, then you got to pay attention to it. But you may not have had that trend line in there, so you may not have been. You might have just been playing the range or playing this channel and now playing this one. Uh, but I like this one, thinking that we're probably coming back up at least to test this last high here, because this is like a breakout pullback to these highs here, and so the next ones are right in here somewhere, and maybe even up here, and you get two more legs up, and then it corrects. There's a failed second entry long right there. Obviously, you don't want to be going long right there into that resistance with a bearish bar and then an inside bar that's bearish as well. So just sit tight. When it ticks higher and turns down, now you got your long trap, and look at it go. Quick, easy move, and you got a new low. First entry, pull back, another second entry right there. Look at that big bearish bar. Bottom just drops out of it. It pulls back. I meant to. This one actually pulls back, and it's a failed second. Since this is a double top, basically, you could treat this like pull back first entry, pull back second entry. So you can treat it like a failed second entry is what I'm trying to say here. I went back and forth. It's real close to being green, but it's right off that trend line. And the odds are we're probably coming down to here. And you would have had this trend line confirmed. Now, you definitely could have drawn it off those first two swings. That confirmed it. You're coming off this trend line, so you figure you're coming down to here maybe going all the way down to here, but definitely probably down to here as well. And so I like entering right there. And then it pulls back. And this was the one I wanted to really make it green. It's real close to being, it's not a very good setup. It's a breakout pullback short. It's right off the trend line, right off the EMA, but it's a first entry, counting from the lows. And so, but you're really expecting prices to come on down, and we've had no close outside that trend line yet. A lot of reasons to be staying with your shorts, and you might have even been thinking after your first leg down here that, hey, we're looking for a measured move before it's over. And we didn't get it till we actually got right at that 1986, just a little bit lower than that later in the day. But you might have also, once you got those two legs down, on the next two legs you're looking for a measured move, and you see we got almost a perfect measured move there. So, and that would have been the more accurate one, is the more recent shorter term one. So several different reasons to be thinking we may go lower there. And then it bounces. This is the first break of this channel, so you're looking for a retest. Notice the pullback, first entry, pullback, second entry. And we didn't really get a close outside this one, and we didn't get any overshoot. So, I kind of went back and forth on this one, but you're looking for that new low, and this is going to take precedence. So, but really, I'm probably entering early here, so this one would probably be, we probably need to make it green. And I thought about it earlier, but I actually took this trade, so I liked that trade. But looking at it, and there's no doubt that channel's relatively accurate there. But really what I was thinking, just so you understand, is that there's just enough room between that EMA and that entry, especially if you use a limit order to exit there. And a limit order would have got filled a tick or so back into that bar, and it shoots on down, and it pulls back right there and goes lower. But I didn't like risking that one because I really thought we'd push up and then go back down. We did end up pushing up before we went lower, but we went a lot lower than I expected that to go. So if that makes sense, you figure you'd get more resistance or more support around this EMA and try to go higher and then go back down. And on the way up here, I really thought we might go all the way back to this line, but we didn't. And then we turn down again, and then it ticks up, and you get another chance to enter right there. And this is really if you're counting off the highs, the first entry pullback and the second entry. But we didn't quite, you're kind of bullish moving up here, and this is not the best setup bar, and by the time you got a real good one, you're back to the EMA. But when you get this close, I really thought we'd push on up, but we didn't. And it ticks higher and turns down, and I like that one. It's right off the trend line. Um, it ticked higher first, and then went out the lower side, and you figure prices are coming to here at least, maybe lower this line, or maybe all the way down here to the trend channel line, and it does shoot down pretty quickly, and then you get a little bounce. Notice those matching lows, pulls up first entry, pull back, and there's a second entry short right there, but you can't go short right there. Look at all that overlap. This is where people tend to get trapped. We're not back to the EMA yet. So when it ticked lower and turned up and went out the other side, I liked going long there. It's still a little aggressive, so I marked it in green. But it turned out to be a really nice trade. And then it shoots straight back down again, but it bounces, pulls back. Looks like it's going to be another move lower there, but you don't want to go short. You can tell this is acting as resistance and then support, and so it's kind of one of those areas where you could get tricked. You definitely don't want to go short into it. And when it ticks lower and turns back up, look how bullish that is. You could only get in that with a stop, maybe a limit right at the top, but actually you could have with a limit right at the top, but I wouldn't risk this. I'd put my stop in there, and people ask me this bar is too big to get in with. Well, let's just see what your stop would have to be. If you entered this with a stop, it'd be 97.50. So 95.50 is where your stop would be to get within 2 points. So even if your stop's right there, if you want to risk getting into this one, the lowest prices ever came back were 97. So point and a half, you had a point and a half there that never even came close to stopping you out. So you could still enter that with a stop. Your safety stop is just not going to be in the ideal place, which is underneath that bar right there. Because a lot of times what will happen, it'll come back just enough to stop you out and then go exactly where you thought. But this one never. This is a reversal pattern, and people saw this, and look at it go, and it shot off like a rocket. And it didn't give you another little trap here to try to get in. Well, it actually did, but you don't want to enter above that bar. And then this one was a doji, and you're right at the top of what looks like your trend channel line, so you just can't enter there, even though it moved higher. And this is one of those you just got to watch it go without you. And if you missed it right here, you had to watch all that go without you. And so, but you can't let that shake you up. That's the difference between a cool trader that is probably profitable and one that's struggling because their emotions, they see this go and they get antsy, and then they watch it again and they say, next time I'm jumping in, and they jump in right here and it turns down instantly and goes 100 miles an hour the other direction, and then they can't figure out what happened. But there's also a little trend line up through here, and you can see there's the break, the move to a new high, and then it was working down. And there's actually a short trap right there, but I didn't like that bar. But then we also had the break there and the new low, so I was looking for a long, and you really could have even gone short again right there, but that's just a first entry short. So, but I like this long because it's right off this lower trend line, and it bounced right where it bounced before. You're not sure this is a trend line until here, but when it bounced right there, and that's a bullish reversal bar after that break, I like that trade, at least back to the EMA, and of course that is where it turned down. But then it bounces again, and you're thinking short here, but we've already had a break of the channel, so what's going on here? And all you can really do is follow the short-term trend line, which you got a break and 2 legs to a new low, and then a trap right there. So just, this one's aggressive because everything's still below the EMA. This is kind of bearish. We had this overshoot up here, so that tells you you're probably going to get an overshoot of this one. Plus, we're looking for a retest after the break of this possible channel. So it gets really confusing in here, or can get really confusing. Um, and then you got a trend line right here, and you're working up that, and you get a failed second entry short there, so a chance to go long. And even though that looks like a doji right there, that's a fairly bullish bar because it could have easily closed while it was flipping up and down on that tick right there and been green. And look at all that. When a bar trades down that much and turns back up, it takes some buying power to push it back up. So even though that looks like a doji, it's more bullish than bearish. So even though it has no body, so a break above that's a failed second entry short, and that one took off real quick. That was a real quick move, and then it bounced back over to this trend line again, and you got a low right here, and there's like the double test. This is almost rangy looking, but it's making a higher high each time, and really a higher low until this one, and then you get this bullish bar. So I like that one. And once it broke higher, you had to be thinking, hey, there's leg one. Will we get a leg two? And you can see we didn't quite get that. Um, it might have even been there because that's like the two-legged correction there. So let's measure from there. And you still don't quite get it, but that gives you a clue that, well, hey, we're headed lower. But that gets you into the 2 o'clock hour, and I didn't mark anything after that. So, but yeah, this one's again a bullish bar right off the trend line, and you could consider that maybe one leg up, and you're probably gonna get another. And I treat it like that, like a two-legged correction, a double test rule, a bounce off the EMA, a bounce off of trend line. There was a lot of reasons to be strong support across there just because of all the, you can see that. So pretty good setup. And we still weren't back to this area right in here. So you figure prices are going to probably test that. I really thought we'd tick up here and turn down, which we did, but it went a little higher than I thought it would. So, um, and again, that was the last thing I marked for the day. So that was pretty much the trades for today. Again, there's always other trades in there. They're probably not high probability, or they're not great setups. So that's why I didn't mark them, or they're too risky or whatever. If there's one that's close, I'll mark it in green. So if it's not marked, it doesn't mean that there wasn't necessarily some kind of pattern or something there, but it just didn't fit our rules properly, or I would mark it. So sometimes this is left up to my interpretation versus, and that's the thing about price action. The price action is telling you what's going on, but there is always some interpretation to it. It's like we all speak. Just assume we all speak English because we know we probably don't. But if your native language is English, and you're talking to somebody in Portuguese, sometimes you misinterpret things, and even though you might understand what's going on, you can misinterpret something. They may use a word you're not familiar with, or you may misunderstand the dialect a little bit. And reading a chart's the same way. Even though you understand what the chart's telling you here, you can misinterpret something. Some of it's up to how you interpret what the chart's trying to tell you. And so it might look slightly different to me, even though we're both on the same page overall. It might look slightly different to you, and I might take a different read than you take. And mine might be right, and yours might be wrong, or yours might be right, and mine might be wrong. But that's why we still have losers even once you learn to read the chart, is because sometimes we just misinterpret, or we get fooled, and that's just part of it. So don't let that get you down. If you get fooled, it shouldn't affect you. If you have a winner, you shouldn't get excited. If you have a loser, you shouldn't get upset, because that's when your emotions start coming into play. And when you trade emotionally, you're not going to be very successful. So when you're trading, you want to be trading. If you have a loser, that's part of what we do, so it shouldn't affect you at all. If you had a loser and you're getting 7 out of 10 of them right, or 8 out of 10 of them right, and you have a loser, that means the next one should be a winner. So just sit tight, wait on the next one, and try to get it back on the next one. And if you can do that without it affecting you, but if you have a loser and you get all shook up and then you're scared and you watch all these trades move without you, just like I was talking about a minute ago, you watch a couple of these good ones, you say, I should have taken that. And if it pulls back again, I'm taking it. And then next thing you know, it pulls back again, and you take it, and you get trapped. So you can't let that happen to you. A loser is just a loser, and a winner is a winner. Both of them come with what we do. So you can't get emotionally tied to them. When you have a loser, that's just part of it. Shake it off and go on and get your winner. And when you have a winner, don't get all high and jubilant about it, because that's what we do. And you should expect to win. So a lot of this is mental. A lot of it's in your mind and how you perceive things. And I've had that conversation a couple of times in the last few days with another trader that's having a lot of success. And he thinks it doesn't matter what you use if you get your mind right and your thinking's right, then you're going to be successful. But I don't disagree with that, but I do think you still have to have something that works as far as your strategy. But once you've got the strategy working, the rest of it's all mental. I do agree with that. It's all in your head, and it's all about you and how you perceive the market and the moves and what's going on. So I do agree with him in that sense. So, um, but anyway, he's shared some stuff with me, and I'll probably share it with the rest of you on the site soon. If you're interested in it, I'll try to share it soon. But I haven't had time to really digest it and look at it real. It's pretty simple, really. It's nothing fancy about it. But I think he's right on, and I think a lot, some of it may sound far-fetched, but I believe it's legitimate. And just looking at my journey, looking back, um, I can see it as well. So, but anyway, I'll share that with you later on the website. But I'm going to wrap it up for now. Hope you have a great weekend. We'll be back again to do it Monday. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.